Hey investors, welcome to the 40 Finance channel. With all of the choppiness that we've seen in the market over the past 2 or 3 weeks, I think it's a good time to check in with some of the analyst ratings, at least the ones that have recently come in, to see if any of those trending stocks are worth doubling down on. Remember, you've had some of these growth names, literally cut in half or certainly down from their all-time highs. And if you're investing in growth names, obviously, you've probably seen the price of your portfolio or stocks in your portfolio slipping down. You might start to wonder to yourself, do I still believe in the story, the reason that I bought this stock? Is it really worth me waiting to try to get back to par? Or should I cut out now and take a loss for the year and potentially buy back in later? So that's what the purpose of this is. We're going to use TipRanks. We're going to go by the freshest data that just has come in for stocks that have been rated over the past 7 days and try to get a feel for which way some of these stocks are trending to give you an idea if it's a good time to double down or perhaps even cut bait. Okay, so here we are on the TipRanks trending stocks page, and these are stocks which have been rated by 3 or more analysts over the past 7 days. So you get to filter out some of your selections here. I chose 7 days. I chose most rated, so we'll see not only the best rated, but also the worst rated. And I eliminated small and micro caps, just sticking with medium to mega caps here. And then all the sectors are included. I'm not going to go through all these names. I'm going to pick off the ones that I have at least some familiarity with. But to me, this is a really cool feature in TipRanks. Instead of going stock by stock, you can say, hey, who's had the most updates lately? Usually it coincides with who's had recent earnings releases or other types of big news. So you will see a trend here in the sense that a lot of these stocks have had recent earnings reports that analysts have been able to dissect and update their opinion on. But like I said in the top of the video, we've had a lot of volatility lately. So just to be able to come in here and use the tool and just say, you know what, 14, 15 days ago, the stock market was in a different place. Okay, things were trending in a much different direction. Let's go in here and see what analysts have said over the past 7 days, which includes most of the volatility that we've seen. And that's what I think makes this useful. If you are interested in TipRanks, please consider using my affiliate link in the description to go down there and learn more. It is a tool that I use all the time here on the channel, and I have a few reviews on the channel as well if you're interested in seeing those. Now let's kick off our list here today. Right at the top is Marvell, and these are sorted by the number of ratings that have come in over the past 7 days. Okay, so we have 24 fresh ratings on Marvell, and you have a stock price today of $92.62. It's getting a strong buy in the consensus, and the average price target is about $99.88 from here. That's just shy of a 10% upside. And if you're not familiar with analyst price targets, technically they're supposed to project the price 12 months from when they put that number in. So this $99.88 plus 8% over the next 12 months, that's how the street would understand, this particular projection. Now for each stock, I am going to toggle over to Yahoo. And as a subscriber over there, I have access to this quick Morningstar rating that I can take a look at and just compare to what analysts are saying. Morningstar has a 2-star price, fair value of 62, and an economic moat of none. Now, as I always say, keep in mind with Morningstar, they are very conservative. They're usually on the low end of price projections, I would say, and that is a good thing. You want to get different people giving you different opinions on stocks. In this case, the Morningstar rating is significantly below even where Marvell stands today at about $92. All right, next up we have Zscaler, which has had 23 ratings, 16 buys, 6 holds, and 1 sell. They're giving it moderate buy as a consensus, $391 for the average price target. That's up 25% from today's price of $311. All right, peeking in on Zscaler over here for Morningstar, you've got a narrow economic moat, fair value of 365, and 3 out of 5 stars for the pricing. Now, in both cases, here with Zscaler and Marvell, you do have companies that are not profitable yet in the tech sector, which of course has been hit pretty hard. So no surprise, at least in my view, not a big surprise on the disparity between Morningstar and analysts. You know, obviously companies that have not produced a profit yet are going to fare worse in a Morningstar system because it's based mostly on fundamental valuations. All right, let's take a look at Snowflake. You have a price of 371, 12 buys, 10 holds out of 22 ratings, and an upside price of only 6% or so, 392.91. All right, checking in with Morningstar, 3-star price, 295 for a fair value, economic moat of none. And once again, this is Snowflake is not profitable, at least not over the past 12 months. And I do believe, let's take it a 1 month here. Yeah, they got ransacked, as so many others did, during the tech sell-off that we've seen here recently. So basically, if you go back to December 1, now that I look at this on this chart, which is a simple chart, you had a price of 306.48. I'm not sure if that was open or close, but back then, on December 1st, you know, arguably you could have got this stock for almost fair value. And really from there, you would have already been up 350, 370, something like that. All right, next up we have Salesforce trading at 265, 18 buys, 1 hold. That's 19 total ratings. Price of 336.38 for the target. That is up 27% from today. All right, on the Morningstar side, a little bit better, a little closer to the analyst. You have 4 stars, fair value of 320, economic moat of wide, which is of course their highest rating. And this one does have an EPS, so it's going to fit better into a Morningstar model. And interestingly enough, you know, if we go back here, what was that, 336.38? You've got, you know, basically the two worlds coming together here a little bit between the 320 and the 336. So Salesforce, if you're into that stock, that could definitely be one worth doubling down on, assuming, of course, you would have at least a 1-year hold, because that's when these price targets are sort of due, if you will. That would be the deadline for this 336, would be 12 months from today. All right, what about Coupa Software? 18 ratings, 10 buys, 8 holds. 222 is a 29% projected upside. Today's price is 172. All right, Morningstar, you've got 4-star price, fair value of 232, economic moat of narrow. Price today is 172, so that was pretty closely aligned. In fact, funny enough, the Morningstar price was $10 higher. Now, here's the thing about Morningstar too that's going to be different than when you have regular analysts coming in. So right now with Coupa, or Coupa, however you say it, you've got 18 analysts who just rated the stock within 7 days. In the Morningstar world, you only have 1 or maybe 2 people covering a stock, so it's not as fresh. They update pieces of their sort of editorial reports. They do have a quant formula that updates certain aspects of their website, but the TipRanks model is probably going to be more updated. Let me see if we can find here when their last update was. 2 days ago. So 2 days ago, they did do an analyst update, but just so you guys know, when you are using Morningstar, you know, you're kind of waiting for these analyst reports to be updated. So if you have a stock that maybe is not as intriguing, it may only update 4 times a year. Now, obviously, like your Googles and whatnot are going to get a lot more updates. I use Morningstar through my local library for free, so it doesn't really bother me that they don't update as often. But I would say, you know, TipRanks, for example, is going to give you much more timely information because it's pulling from numerous different sources each day. All right, next one, Ulta Beauty, 10 buys, 6 holds. You got a target of 451 on the consensus, which is plus 10% from today. And over here on the Morningstar side, well, you got a pretty big disparity here. Fair value of 259, narrow economic moat, and it looks like they just published this report 5 hours ago, so it is fresh information. So analysts and at least Morningstar have a much different view on this one. Let me see if I can tell what's going on or projected here for next year. You've got $16, $17 this year for EPS, maybe another 50 cents next year. It does look like they could have slowing growth. So 38% in fiscal year 2022. Now, I don't know when that started or ended, but this year looks really good. The single digit side for 2023 would definitely kind of lull a stock like this to sleep, particularly on the retail side. So I'm not sure if I can tell who I agree with just from these quick estimates, but I would say this single digit growth would be a cautionary tale from my side, not because the company's going to go bankrupt, just because the stock will start to lose some momentum. All right, next up is CrowdStrike. And CrowdStrike, I talk about it a lot as being one of the most overvalued tech stocks that I've come across, at least out of the popular ones. 13 buys, 2 holds. You did actually get 1 sell in here. But when you put the consensus together, it's still called a strong buy. Price of $289 is 38% up from where we are today, at least the projection. All right, on Morningstar's world, we got fair value of 200, which honestly is a heck of a lot higher than I would have thought. Economic moat of narrow, 3-star rating on the price. So really coming off of this latest step down that they've taken, November 12th here, you're at 284 or something, and you walked it all the way back to 200, even a little bit below. So depending on how you view this one, you're getting it at fair value range, give or take, and the potential upside, if you believe the analysts, is 289.20 over the next 12 months. All right, now we have Splunk, price of 120, 9 buys, 7 holds, target price of 167. That's projected upside of 39%. All right, let's check out Morningstar, fair value of 158. All right, let's see what's happened over the past month in the tech stock meltdown. You're at 167, dropped to 137, maybe 110 or so on December 3rd. So at 120, technically this one is below fair value and a good economic moat. We look at analysts who actually have a little bit higher of a price target for it. The catch with Splunk, though, if you don't follow it, it looks like a good buy here, certainly one to consider doubling down on. The catch is, though, the CEO has recently announced that he's leaving. So anytime you get that, you just get some weird speculation, right? Why is he leaving? Some people will say that leaders don't leave when the going is at its best, right? They're worried about something. But it could just be someone who's built up a lot of equity in the company and is just ready to take another path with their life, All right, Ambarella, I'm going to skip only because you got 0.4 upside and I don't know a lot about the company. So that brings us to DocuSign, which of course has been crushed recently after mediocre earnings report. And you have $152 on the price today. 14 analysts come in over the past 7 days. 7 buys, 6 holds, 1 sell. So basically a 50-50 split on DocuSign. The consensus, though, 212.75, that projection over the next 12 months is still plus 40%. Let's see what Morningstar says. All right, we got a fair value price of $244, $100 under, narrow economic moat, 4-star rating, It looks like that fair value price was updated 5 days ago, so it's not exactly old news. We take a look at the chart. This was one month ago, sat at 273. Now you're at 154. It was as low as 131. So there is an argument here with DocuSign, if you believe any of this, that it would be worth doubling down on at 150. Analysts give it 212.75 as their projected target. I'm going to open this one up in the broader view, or we can go down here. I've shown you guys this a number of times. This is a detailed list of analyst forecasts. We only use the 4- and 5-star analysts. And here's your ratings over the past 6 days, just to get a closer look. I'll try to keep it in what fits in the screen. Let's see, 200 with the hold. The sell was 175 was the sell. So you're even below the one person who says sell. You do have a 170 as the low. A lot of 200s in here, though, for DocuSign. So very well might be one worth considering. Or if you're just down a little bit on it, say 10, 15%, it could be worth maybe doubling down and holding for another year. All right, last one we'll do today is Okta. Current price of 242. 9 buys, 5 holds, no sells. Target price of 270. And then this projected upside's on the lower end of what we've seen so far, 11.34%. Checking out Morningstar. Fair value of 280, economic moat of narrow. This is one without EPS, so very surprising. I would not have guessed that with Okta or some of these others, but they are getting strong ratings from Morningstar at their current price. Let's look at their 1 month real quick. You've got about 262 before the market started to pull back. The low was 197. You're at 241 today. It is interesting. This is another one where Morningstar comes in above the average analyst target. So Okta certainly could be one to keep on your watch list. All right, guys. So the point there was to take a look at which stocks have been updated the most since we've kind of had this recent meltdown. A lot of those ones recently posted earnings, but we did get some of the high growth names in there, which I think is interesting because obviously they got blasted the most in the sell-off. And yet when we kind of compare two different opinions, whether it was Wall Street analysts as a consensus versus Morningstar, there was some stocks in there, at least if you're going to listen to analysts, that you say, this might be worth doubling down on. So hopefully you got some fresh ideas out of that. As always, if you liked the video, please give a like, subscribe to the channel. We'll see you on the next one.